Hello, my name is Ernie Massri. Today we'll talk about how people really feel and act in times of recession and the psychology behind it. I will talk about real-life examples of people's behaviors and how their behaviors benefited certain sectors and companies in the stock market. But before we move forward, here's a quick reminder.
I'm not a certified financial advisor. Take everything with a grain of salt. Always use your best judgment. Remember, you're solely responsible for your investment decisions.
By the time I'm making this video, there's been some volatility in the market for quite some time. There are also some indicators creating concerns about a recession happening relatively soon. The idea is to have the edge on knowing how people really feel, think, and act when hard times hit. Traditionally, there are some companies and sectors that are more able to stand recession and even outperform the S&P 500. This is especially true if these companies pay dividends and have strong balance sheets. These companies not only are able to stand recession better than the rest, but also tend to recover faster once the recession is over. But first, we need to know what businesses and what sectors are more likely to blossom in hard times. And to do that, we need to know how people feel, think, and act during times of recession. After all, businesses make money from their customers, and customers are people. Let's start from the obvious. When a recession hits, it's no secret that people try to save more and avoid, until a certain extent, unnecessary expenses. It's no secret that Walmart and dollar stores thrived during the last recession. For example, Dollar Tree stores had more than 60% return in 2008, outperforming the Standard & Poor's index in more than 90%. That makes perfect sense. People have less money, they try to spend less, right? That's the logical part. However, there are other sectors and companies worth considering. And the reason is based on how we feel and act in times of recession. And here's where it gets more interesting. For better or worse, the first concept we should have in our minds when recession hits is
Sugar! When recession hits, sadness and anxiety appear. The result? People tend to look for something sweet to eat. It can be chocolates, candies, etc. And it makes sense. Looking for sweetness, it's a primal thing.
Even the word sweetness has a positive connotation when defining a human being. We don't tend to say, I like this person, I like this girl, she is so bitter, or this person is so bitter. We don't say that. No. Back in the old Stone Age, men walking in the forest would try to find fruit, and sweetness was an indicator that the fruit was good enough to eat, that it was not poisonous. We look for sweets to survive. We look for sweets to feel safe, and also to satisfy a primal pleasure. So my first suggestion is look for companies that make sweets, affordable sweets, high in calories, also soft drinks. And to make things sweeter, make sure they have strong balance sheets and pay dividends. So let's take a look at a real-life example. We can see here in the chart how Hershey's, the chocolate maker, did fairly better than the Standard & Poor's 500 during the last recession. Hershey's is the blue line and the S&P is the red line. Another concept we should keep in mind in times of recession is
immediate gratification or instant gratification.
Uncertainty and anxiety are not uncommon in times of recession. People tend to lose faith in the economy more than ever and feel helpless, and become pessimistic more than ever about society. Worse yet, completely discard and disregard the possibility of having a bright future. So delaying gratification for a bright future that doesn't seem realistic at the time doesn't feel right. It doesn't make any sense, at least when immersed in the perspective of recession. So what do? We tend to look for immediate gratification. Moreover, people might start feeling lethargic or with less energy during these times, partly because of frustration and overwhelmness, and that could also be explained as a primal reaction. Think about how men in the past had to cope with winter, bad weather, or scarcity. It would make sense to stay in their shelters quietly, saving as much energy as possible, trying to avoid at all costs embarking on an adventure to find gratification. Understandably, it was better for them to stay in their caves, painting, sleeping, or whatever it is they did back in the old Stone Age to find instant gratification. Now at present, we behave pretty much the same way. When things get tough or the situation is out of our hands, we tend to look for immediate gratification instead of delaying it for a long-term reward. So instead of cooking a laborious meal, we might just go to a drive-thru in McDonald's, which by the way offers lots of sugary and fatty treats that makes us feel safe and happy. For better or worse, alcoholic drinks might also provide instant gratification. So my second suggestion from an investing point of view is to look for companies that provide affordable instant gratification. Whether they provide products or services, these companies can be resilient in times of recession, especially, and as we mentioned before, if they have strong balance sheets and pay dividends. So let's look at some examples of companies that provide instant gratification and see how they did in the last recession. Now let's see how Netflix did when compared to the S&P 500 in the last recession. Netflix, which provides immediate gratification at a relatively low cost, fared better than the Standard & Poor's 500. The Standard & Poor's is the red line, Netflix is the blue line. You can see the difference. People decided to stay home safe, warm and cozy watching Netflix during those difficult times. Now let's see another example of how an immediate gratification provider thrived during the last recession. Here you can see how McDonald's outperformed the S&P 500 in 2008 in more than 40%. As you know, McDonald's provides immediate gratification to our primal sugary needs. Here we have another example. Molson Coors Brewing Company is the blue line, Standard & Poor's is the red line. As you can see, its stock price was pretty close to the S&P 500, but when the recession started at the end of 2007, the gap widened in favor of the brewing company. Granted that the products and services of the companies I just mentioned are used or consumed regardless of the time of the year or economic cycle. But chances are that those companies that provide sweets, including soft drinks, as well as other companies that provide products or services for immediate gratification, tend to do better in times of recession, especially, as I mentioned before, if they have a strong balance sheet and offer a reasonable dividend yield. So what other companies or sectors do you consider to be resilient in times of recession? Let me know in the comments down below. If you found this video sweet and interesting, please hit like and subscribe. Thank you. Have a wonderful day.